Good evening, everyone. I am CA Vikas Gupta, and I welcome you all to yet another webinar on global trends in internal audit, a look ahead, organized by the Internal Audit Standard Board, ICI. So today we have with us CA Sandhya Sriram ma'am, CA Shrikant Raman sir, and Shri VGVS Sharma sir, who would be taking the technical sessions followed by the question and answer session. Before we start, I would like to welcome Madam CA Seema Agarwal, Chairperson, Patiala branch of NIRC of ICI, for the opening remarks. Welcome and thank you, Seema ma'am.
Thank you, CA Vikas Gupta ji. Good evening, one and all distinguished personalities who have taken out their precious time to make this webinar a masterclass. I pay my regards to our very own esteemed and versatile chairman, sir, CA Charanjot Singh Nanda ji, who is presently not with us, but shortly he will be with us. So he is a distinguished CC member, our vice chairman Gyanchand Mishra ji, CC member ICI, CA Sandhya ji, CFO Narayan Health, CA Srikant Raman ji, head of the internal audit Narayan Health, Shri VGVS Sharma ji, our guest speakers and our participants, and of course, our great backend team. I really appreciate the working of ISP ICI headed by Nanda sir, for whom I would like to say a few words कि वाकिफ है जमाना इनकी उड़ान से, वो और थे जो हार गए आसमान से. So what is important is our effort to collaborate for the right discussions on the right time at right platform. So in this virtual conference room, we will accelerate the exchange of ideas and scaling up high of the good practice of mutual discussions. So I'm sure that our two of the sessions, firstly, the creating business value through internal audit function in the way of discussion. And the second one is how the internal audit function is metaphorizing to meet emerging business challenges. So it will help all of us to its max. So these are the important agendas and vast also. Time available is also very limited. So without further ado, I would like to show my pleasure for inaugurating the session. I am confident that you will find the new ideas, fresh energy, and novelties to sustain your efforts in understanding all the concepts. So with all of my gratitudes, I wish you all a very successful webinar. Thank you so much.
Thank
Over
you.
to you,
Thank you
CA
very
Vikas
much.
ji.
Thank you, Seema ma'am. And I would also like to thank Nanda sir for continuously contributing in conducting these webinars. Currently, he is not present with us, but he'll shortly be joining in a while. So let's begin with our technical sessions. The first topic for the evening is creating business values through internal audit function, a conversation between CFO and audit head. The session would be taken by CA Sandhya Shriram ma'am and CA Shrikant Raman sir. Sandhya ma'am joined Narayana Health as the group CFO in December 2021. Prior to joining Narayana Health, she has close to 20 years of experience in Unilever and Wipro groups, performing a broad spectrum of roles such as business partnering, audit and risk, Ombuds ethics program, digital transformation, controllership, financial planning and analysis, shared services, technology design and implementation, supply chain finance, and project management. She was placed in India's top 100 women in finance by AIWMI. She has been awarded the CA CFO, CA Professional Achiever thrice by ICI. Madam was placed in the top 50 young leaders in India by Economic Times in 2011. An alumna of this ICI, she had secured an All India rank in CA Foundation, Inter, and Final Examination. Madam Sandhya is a regular speaker at national and international conferences of ICI and various CFO forums. Now, I would also like to introduce CA Shrikant Raman sir. So, Shrikant Raman sir heads the internal audit division of Narayana Health. He joined Narayana Health on March 6, 2008 as a finance controller. He holds a Bachelor of Commerce degree from the University of Bombay. He's a certified chartered accountant and a chartered management accountant from UK. He has worked as a finance manager for two medium-sized companies that were part of diversified conglomerate in Muscat. He has around 23 years of experience. In the past, he has worked with the Omzist Group. Welcome, sir, and welcome, ma'am, and thank you for sparing your valuable time.
Thank you, Vikas. Thank you for the fantastic introduction that you've given. And thank you for giving us this opportunity to be here. I'm just going to share my screen for a minute and then I will go back to the conversation. So when ICI reached out to me on this topic, I was wondering that instead of going through technical content, nowadays Chai Pe Charcha is very famous. Why don't we do Coffee Pe Charcha? Can we create a format where we can have a charcha on this topic between an audit head and a CFO? It is said that internal audit is like on one side of the table and the CFO is on the other side of the table, and we're always looking at each other. But in reality, it's a round table. So what goes around comes back. So you're able to see my screen and the...
Yes.
Okay, so what we're going to do over the next 1 hour is pick up some pertinent questions, practical questions, which organization faces between internal audit and finance. And and I'm very, very happy that I get an opportunity to ask questions to Shrikant sir. Normally, that is his privilege. He only gets to ask all the questions and I have to give all the answers. So this time I'm getting that opportunity to ask him questions. So that's a privilege. Shrikant sir is less of an audit head for Narayana. He's more like the chief mentor for the organization. There is so much that each of us learn from him every day. And I feel I have a great fortune today to be able to make him share his knowledge with us. So before we begin the questions, maybe I'd like to hand over to Shrikant sir if he would like to add anything to this before we get to the questions.
Hi, good evening to all of you. Thank you so much for this opportunity. So as Sandhya has rightly pointed out, kabhi gaadi na ho par kabhi na ho gaadi par. So today is that turn again today. Thank you for the very kind words of introduction from all of you. We can go ahead and start in the interest of time. Thank you all for this opportunity.
Shrikant sir, my first question is that I have been more than 9 months in this role, and I've always seen you as a extremely business-focused audit head. So my first question for you is, how do you build a business-focused audit team? Because audit is normally like a fault-finding team who always pick mistakes of others. That's how they are seen as. So how do you build a business-focused audit team?
I think the great trick is to catch them young and fresh. Yeah? When they're coming in, if we can align them with the higher purpose of the organization, especially in healthcare, right, with the organizational vision and vision. If we can imbue them with those thoughts of why healthcare and why healthcare is important and what do we actually do in healthcare, if those can be taught to them when they come in, I think the rest of the job will be very easy, right? So the induction program should have a very immersive kind of experience in the various operational activities of the organization. See, the audit team should understand that, there is a difference between the live environment in which many of our colleagues are there, they're facing the customer, and then they're trying to do a good job. And, on the other hand, the audit team is a relatively back-end analytical approach. So both are very different. So if it is a question of blaming people, you have to also understand the circumstances in which things happen. So if we can get them to go to each person's job, understand what job involves, what do they face the customer, what happens when there is a crowd and the IT system is not working, right? These are the experience that they should go through before they really start auditing. Yeah, another important aspect is the approach should be, you are not the problem, but together we can always be the solution. But this is not easily done, This takes a long time to do it. It is actually a very, very cultural aspect of the organization. It takes time to build. Another aspect which is troublesome is that, given that the audit team always have a high attrition rate, it is for the leadership team to keep permeating, espousing all these values at every opportunity. I would like to go back to what Mahatma Gandhi said about the customer. He has always held that they are not a disturbance to the business, but they are the very reason why the business even exists, right? In today's healthcare environment, the patient comes first, the doctors next, and then everything else. I keep explaining over and over again to the young internal audit team that you don't have two horns. You're as good as anybody else. Please understand that the patients and doctors come first. I also keep telling them, if there is an opportunity to provide some help to any patient or any patient attendant by guiding them to the correct doctor or providing some kind of information about a patient who is there in critical care, somebody who wants to know about them, please do not shirk and go away from that opportunity. Grab that opportunity with both hands. The internal audit can definitely wait, but the patient needs cannot wait. At least at the subliminal level, this will help them get grounded enough to understand what healthcare is all about. And sooner or later, this empathy and understanding of what is important for this business will show up in the output of the audit. I think it is all about building that culture.
Thank you, sir. That was a very beautiful response on how we have to build empathy, not just to the business stakeholders, but also to our end customers, because audit really is 2 steps away from the end customer. So building that empathy, building that care, building that culture where you value the customer outcome the most. I think that's a very nice articulation. Taking one more question forward, many times audit makes observations, and there's always a long list of Excel sheet that you keep giving me to solve. Sometimes the business may struggle to prioritize solving audit observations, either because of resource, because of time, because of cost constraints. So in such cases, as an audit head, how do you lead these items to resolution?
See, I feel this is a matter clearly for the audit leadership to take forward, right? We have to build those bridges. I believe that a transparent two-way communication with an open mind with the senior management team, first to understand, for example, in the next 2 quarters, what are going to be the top priorities for the business, right? That's very important to understand so that we can align what needs to be done first among various things that are happening. But we also, as audit, need to also communicate from the audit point of view what cannot be posted. I will try to explain this view of mine with 2 examples from our own system. For example, if we see a possible compliance risk, that should receive a much higher priority for mitigation as compared to a saving potential in, say, electricity for a particular right? Similarly, an observation closure, which might help in reducing the possibility of a suboptimal patient experience with impact on the social media, etc., deserves a much higher rating than an IT issue in the stocks, maybe, which is not a customer-facing issue, right? So, I mean, it is not, I'm not saying it is easy, this prioritization, but with efforts, it can definitely be done. We need patience to go through details and then get this done, right? One factor that I know definitely that will help here is a constant dialogue. If we have a set meeting with the dates fixed in advance for all the stakeholders, they definitely come into the meeting in a positive frame of mind. Once we are able to show that the prioritization processes seem to be transparent and inclusive, then there is more ownership and less of a hard bone to worry about, right? I mean, on a lighter note, in the current organization, I used to head the IT before. That also helps to a large extent. Sometimes the business team comes to me and says, "Sir, can you help me get this point to the IT? They listen to you more than us."
True. True.
My turn, if you don't mind, Sandhya.
Sure.
Yeah, I think it is important. Yeah.
So the audit head has to ask questions, even in a Q&A session in which he is answering.
Dog sale. Not sale. This is little bit different thinking, See, this encompasses what should audit do and not do. See, normally, internal audit, should it get involved in any area? Is it all right for the internal audit to ask any question to anybody in the company? Is there any area which is taboo? For example, is it that the organizational strategy is normally the realm of the board of directors and the top executive of the company? Is there an area where the audit should get involved? What are your views on that?
Sure. So now I think whatever I'm going to say now, sir is going to hold me to it. But actually, if you ask me, no area is a taboo. More access means better outcomes, because the audit team actually gets to see the area without the bias of the operations, without the bias of the constraints that the operating team faces. So every area that audit gets into creates value. So for example, I have seen audit get into cost management, come up with recommendations saying you can save cost here, come up with efficiency recommendations saying if you do this differently, maybe you can be more efficient in your outcomes to patients, or operationally you can do this differently. So every area where audit gets into, audit creates value. So I would not say any area which is outside the purview of audit. But it also comes down to the maturity of the audit team. Like you had nicely, like you had nicely articulated when you were answering the first question, saying there has to be a solution-oriented approach. It can't be a fault-finding approach. There is no you versus me. It is more us. You know, this problem has come now. We have figured it out. Let's figure a solution together. Unless we have that approach, I think it will be difficult. Business will then guard the areas where they don't want audit to get in, because they know that audit will come and pick up some issues and put them in the spot.
Yeah.
Now, the other question you asked, which was on organization strategy, there's just a little bit of a nuance to that, which is that audit normally is not steeped into various input triggers that business receives while driving decision making. So, which means that, say, for example, we decide that we want to do a particular business venture. Now, for doing that business venture, there will be various data elements that the business leader will be reviewing on a day in, day out basis, which gives him or her confidence that we should do that or we should not do that. And to that extent, even though audit may come outside and with a lot of organization background and context, some of the forward-looking data inputs that are available with the business, maybe audit may not have. But then where I think audit can really participate in business strategy is there a proper governance and decision making? It's not ad hoc, gut feel based, I want to go do this kind of thing. There has to be a good governance. There has to be accountable, there has to be a proper KPI. There has to be accountability to deliver the KPIs of the strategy. And most important is there has to be a proper risk assessment to any big business venture. What is the threat to the organization? Is the organization looking at risks of these ventures? Many times what happens is that when people get into new ventures, they get so excited, they forget some of the risk contours. What is the risk appetite of the organization? Are we taking risks above the risk appetite of the organization? Even if we are taking below the risk appetite, what are the mitigation strategies? What are the exposure we are carrying? Are we as leadership, including the board, clearly aware of the exposure that we are carrying? So some of those areas, I think audit can play a very, very good role. Having said that, there should not be any barriers to the audit team. Organizations should learn from the outside in that audit provides and have to create an inclusive environment which is best for everyone to the table. Now that you have given me this thing that we'll open up all the areas and you will look at everything. Now I want to flip this back on you and say, now we've opened up all the areas to you and you've picked up many observations. Now you have the role of presenting this to the audit committee. So I want to ask you, how do you prioritize what needs the attention of the audit committee? And more importantly, how do we present the matters to the audit committee in a way that management is able to take the feedback in a constructive fashion? Because when audit puts something on the table in front of the audit committee, the first look, all the audit committee members will look at the CEO and the CFO and ask what is happening. So how do we manage those dynamics? Over to you, sir.
Yeah, I mean, what I hear is that the auditor also has to play the role of a diplomat. It's very important in the long-term consideration. The audit function has to be effective in what they're trying to do. They have to carry people together. See, let us look at it like this. We are called internal. The word is very important. We are called internal audit for a reason. We're internal, period. So what this means is that we will win our laurels from the solutions process improvements and saving that we bring to the table, and not from the problem that we point out. One has to understand very clearly that there is no losing side here. Sometimes, of course, all the confusion is about the prioritization of what needs to be done first and what needs to be done second. This is an aspect that can be definitely discussed and closed. I don't see a major problem in that area. If you look at a particular criteria, which can probably help us in thinking what are the matters which are more useful to table before the audit committee, I have a few criteria that I can share. One is to ask the questions: what is the possible impact, the best outcome, the worst possible scenario? Where can it lead the organization to? That will give an idea of how critical this problem is for the organization. Is this issue something that is enterprise-wide, or is it localized to a particular unit? Is this problem new, or is it something old but not has been acted upon at all, or has been only acted upon partially for whatever reasons? Is this problem transactional? Did one person in system did not do the job properly, or is there a process or a systematic fault or a lacuna, which will be always more critical? Does this observation affect us in the long term? Is this problem only for the units of our company, or is it something that is there across the sector, for example, the healthcare sector? Now, if such is the case, do we see a big competitive advantage if we have to fix the problem well before anybody else in the industry have done that? Right? These could be generally the guiding principles on which we can think about matter, whether it is critical enough to be taken up to audit committee. Right? On the other question about how do we play this management versus audit role in the audit committee, and how do we get things done? Right? I can share my experience here in terms of what we have seen in our own audit committee. You know, very rarely I have seen a senior audit committee member get upset over a newly discovered issue, even if it is having some serious impact. The worst censure has been always reversed, that always has been reserved for known issues, long pending issues that have not been acted upon. I think that gives a story, right? That gives us clearly an idea of where the management has to act. Now, internal audit need not always be messengers of only bad news. This is a wrong concept which has flowed down the ages, looking at the auditor only as a policeman and a fault finder. I don't think we are bringers of only the bad news. If there is a particular process that has drastically improved over time, there is no harm in stating that too in the audit committee. I can give an example that in one of the audit committees, when we had to present a rather very dismal picture of a claims management issue at a particular unit, in order to be objective, we also trace the claims process improvement in terms of the percentage of reduction that have come down across the group, and the system automation that the management had put in place 2 years ago that had helped in this journey. When we presented this, both these facts side by side in the same slide, there was appreciation all around. And the management wholeheartedly embraced that problem, and within 2 months, they came back to the audit committee with a closure report on that. Another aspect, you know, that as auditors, we should also acknowledge whenever we report anything to the audit committee or to the management, is that if there are any extraneous factors which are beyond the control of the company management that is affecting the early solution to the pointed out issue, we should speak about it, we should elaborate about it. In our healthcare, for example, we have been always plagued with what is called as a batch number mismatch. You know, the item that we actually dispense and what is recorded is sometimes not the same. That causes discrepancy in terms of what we think is the expired item. So for this problem, we have been always advocating a barcode solution, but that has moved very, very slowly. Now, when we look at why it has moved slowly, when we discussed this last in the audit committee, we also made it a point to mention that there is a crucial missing link here, is that there has been no standards on the barcoding content that have been mandated for the domestic medicine manufacturers by the government. Now, unless that comes in, it is very difficult and very expensive to, you know, come to a solution with the barcode. So once we give this perspective, things are more balanced. To give an example, outside the audit realm, even in crime, the justice always looks at an extenuating circumstance. Let us be fair as auditors and acknowledge that in our audit reports also. I think that will clear the air, so to say, for everyone.
Very, very nicely articulated. And I know I can vouch that the way issues are normally presented the way you present issues to the audit committee, there is always the full perspective of why the issue had occurred and what the management is doing to solve it. And that goes a long way in building credibility with the audit committee. The audit committee sees the internal auditor as an independent, their person in the management.
Yeah.
Yes, yes. And therefore, when the internal auditor stands up and says the management has done 80% work, they have 20% more to go, the perspective is very different than when the internal auditor says that this 20% is absolutely wrong, not done. Then the climate changes. So I think it's a very, very nice way that you've articulated this. Now, given that we have said it's a charcha, coffee pe charcha, so we should also be able to talk to our participants. It's a webinar, and therefore, there is a technology aspect of that. But we still want to give a try on this. So we have a small question which we want to pose for the audience. And what I would request you is to kindly comment on your respective tabs, and I will read them out for the benefit of the other participants on the call. And we will maybe we can comment on them and hear your thoughts also, because this is a topic which is very, very important to all of us as auditors. And the more views we share with each other, the more the collective knowledge will enrich. So the question that I want to pose to you is, where do you think internal audit adds most value? We spoke about strategic thrusts, commenting on the strategic thrusts of the organization, providing an outside in, providing a view on the operating efficiency of different functions, or providing assurance on compliances and controls. We'd love to hear from you. Please share your views on the chat window, and I will read them out.
Yeah. While they're doing that, should we go ahead with the next questions, India, in the interest of time? Or should we wait for them to give the questions?
Maybe we can give a minute. In the meantime, there is definitely a feedback from Bhabani that we should give more practical examples. So as we go through I think you've tried to give practical examples in the previous question as well. But as we go through the course of the event, we will try to give practical examples throughout so that we can give that perspective. We will give, just to stay on this theme, we can take another minute for your questions. Sorry. Please feel free to share your questions, your perspectives, your views. We look forward to hearing from you. Okay. So what since we are not hearing any answers from you, we'll still keep the window open, like Shrikant sir said. Please share your views while we move on to the next set of questions. And as and when something comes up on the chat window, I will pause our discussion and we will pick up the thread that you posted. Even if it's a view, if it's a comment, if it's a share, an experience sharing, an example, you can please feel free to share on the chat window.
Sure. So let me go ahead with the next question for Sandhya ma'am. You see, in the recent times, the enterprise risk function has come on its own, right? Especially so in respect of the more regulated industries like the banking, insurance, telecom. Do you see any synergy in this being combined with the internal audit function? Or do you see any risk or any dilution in the independent roles if they are merged? Is it a good thing to merge, or we should leave it apart? What do you feel? And is it affordable for smaller companies to do both in a separate way? These are questions I would like you to discuss.
Sure, sir. So if you look at it, enterprise risk management is a structured, consistent, and continuous process across the entire organization that identifies, assesses, and decides on the response and reporting to opportunities and threats that affect the achievement of its objectives. So it's really an org-level framework, processes, and response. Whereas internal audit is an independent, objective, and consulting activity The role is to provide objective assurance to the board on risk management. So IA cannot own or manage any of the risks. It can provide and collaborate on the risks. So the first point of distinction, which more than distinction, I think first point of call out, very, very important call out, is that ERM is a management responsibility. ERM, even if it is owned by the IA function, is not an audit responsibility. Now, the Institute of Internal Auditors has published a very detailed position paper. I think you can look it up on the internet also. It talks about the internal auditors as people who are responsible for ERM. In that, there is a beautiful picture which says it's like a, like a fan. It says what all can internal auditors do as ERM, what all internal auditors can do, but with some governance, what they cannot do. So I want to take a few examples of what they cannot do from that paper. They cannot set the risk appetite of the organization. The risk appetite has to be owned by the leadership. The internal auditor cannot set the risk appetite. The internal auditor cannot provide assurances on risk. They cannot go and tell the board that I will provide management assurance on this risk. Internal auditor cannot take accountability for risk management. These are items that internal auditor cannot do. Some examples of items that internal auditor can do with safeguards is like coordinating ERM activities. Like if management is undertaking ERM activities, governance responsibility, program management responsibility, internal auditor can take. They can champion establishment of an ERM process. So for example, if an organization is launching an ERM process, somebody has to do the cascade, somebody has to explain, bring people on board, bring that buy-in. That is something internal auditor can do. There are various things which they can't do, which they can do, which they should do with safeguards. I'm not getting into all those details. But just to answer your question on whether ERM and IA go together, I think ERM is very, very embedded into the business. And therefore, they are very, very close to the risk intelligence of the business. And IA will definitely benefit from that risk intelligence. So that will help design the right audit priorities for the organization. So there is a synergy there. Also, ERM is a strategic function. So the risk climate has to be measured with meaningful data. And the internal audit team is natively equipped with drawing analytics from data. So, and especially monitoring key risk indicators, that is something that naturally comes to the internal audit team. And there also the synergy comes. So the only call out I will have is, and it's at the cost of repetition, internal audit cannot be responsible for the risk appetite. Only management is responsible for risk appetite, risk mitigation, and ownership of the risks. But also we need to understand that ERM is evolving both in its intent and its potential. For example, in many organizations, ESG is working closely with ERM, to see if, because sustainability is the biggest enterprise risk today. Sure. So, that is going with ERM. Some business environments require, like you said in the beginning, and financial businesses, etc., require that certain independence of the ERM function from the internal audit. So there is some context which need to be given where you may have to keep it independent of IA. But in today's scenario, the functions staying together does create value for the organization. Now, while we are on this, while we find that, we're not receiving too many responses, I do want to take one more chance and host my next Let's Talk. I'm hoping that for this, we will hear some people talk. Okay. Sorry. Yeah, here. Should internal auditor be responsible for ERM? You heard my view. We would like to hear your views on should internal auditor be responsible for ERM. And while we are on this and we are reading this, maybe if Shrikant, you want to share any views on this?
No, I think it has been beautifully explained. There is synergy, but there are also lines which are clearly demarcated. If you do not respect those lines, the internal audit will end up losing its independence as an independent advisor on the controls and other aspects. And in the worst scenario, it may get blamed for the risk which is not equipped to handle. I think you said it all when you made those demarcations very, very clear. There is synergy. We can draw from it. We can use it to understand where we need to put our efforts for internal audit. But taking responsibility for the entire ERM process, because it is very, very close to business, and audit getting too close to the business will be frowned upon by the audit committee too. So that's where we are to draw the line.
Sure, sure. Our group still needs a little more coffee to start asking questions. So we will.
Hey, one audit question. Is there somebody out there or only we two are talking?
As I can see, we have right now about 295 people who have logged in.
That is reassuring. That's reassuring.
I'm hoping that we will at least get 29 questions. 10% is a good number to aspire for. So I'm hoping that some question will come. But while the question comes, maybe we will move on to the next question. And this is a little more operating, day in, day out, kitch point, so which is many times, and I have been an auditor before this, and the standard response whenever an audit team raises an issue, the standard response is IT problem, IT has to solve. And if you actually try to understand, the IT team struggles to solve the problem, either because most companies are perennially backlogged on IT projects, or they don't have the right ownership, or they don't get the right business requirement, or they don't get bandwidth from testing from the business. So in all, it is nobody's problem. Whenever you go to business with the audit point, they'll say IT has not resolved. When you go to IT, they will give you one very technical explanation on what they could not do, and you'll not know what to do with that explanation. So how do you deal with this kind of a situation?
Yeah, I have been there. I was looking after IT not so long ago for Narayana. Yeah. Let us not always blame the IT, it's my humble request. On a lighter note, any major IT systems take about 3 to 5 years to settle down. And that is when the management decides to go for the new system. They don't allow anything to settle down. Huh? They want something to do, right? So that's one problem. But on a more serious note, we are facing this day in, day in all organizations, especially so in our case, where we have gone in for implementing a state-of-art, hospital information system that has been rolled out in the last 3 years or so. And definitely there are some parts which are still evolving there. Recently, we went live with our laboratory module and stuff like that, right? So it is evolving still, it is not completely there. But one big thing which will help us here for the audit function is that internal audit has this weapon in its armory called as the root cause fixation. Right? So this will always help in playing a moderating or a mediating role between the conflicting functions. And we have to gently nudge the appropriate team towards solutions. Right? You talked about situations where the requirements are very vague, sometimes. So the IT team doesn't know how to go about it. Maybe the internal audit team can possibly help by linking the control requirements to the overall requirements, and therefore bring a little more clarity to the IT team on those expectations. Right? Another way to win time from the operations and finance for testing and rollout readiness of a particular feature is to explain what they're going to get out of it. Can we tell them clearly how many audit observations will close if they invest that particular time in getting this rolled out? Many a time, the end users are not clued as to what is the benefit that they're going to get out of a particular feature that is planned to be rolled out. If we can bring that extra information as to how their daily work is going to become less burdensome once this feature is implemented, then possibly we can expect more enthusiasm, more cooperation from all the stakeholders. Somebody earlier was asking about live examples, right? So I think it is the right time to pitch in and speak about what we really saw in our environment. I will share an example from our own healthcare environment. When our organization wanted to implement some online indenting for medicines, there was a terrific resistance from the nursing team, and they are the largest body. We employ about 8,000, 9,000 of them. 50% of our people are nurses, and we can't afford to fight with them. They're a very difficult resource to get and maintain, right? There was this very stiff resistance from the nursing team who saw this more as a extra work being dumped on them, because their job is to treat patients. Their job is not to make entries, right? So it is very easy for them to write the medicines on a prescription pad it is very difficult and more time consuming for them to order that on the system where more details have been filled in and all that. However, when we pointed out that once the online indenting is implemented, they will get a confirmed SLA from the stores. At that time, they never had, right? So they will get a confirmed SLA as to when the medicines will be delivered to them. And the stores will also become accountable to them if they are not getting the medicines on time. Now, how the medicine dispensing errors will be controlled, right? We took them on board, explained all this to them, and then you could see the visible enthusiasm. 100% of them came on board very happy. Okay, consultants were getting angry with the nurses for late dispensing of medicines to the patients under their care. This problem came down to literally 90% even in the first month of the rollout. Added bonus was that once we could implement the online indenting by the nursing team, we could then very easily introduce a remote online prescription audit, which is a great tool to bring down the medication error. So a large risk for the organization in terms of a wrong medication, for example, a pediatric child, getting a dose of an adult. All these are errors which can sometimes creep in. But because we could go online, we had a separate team of pharmacists who could go through this and nip the problem in the bud before it even happened, right? When we had the JCA audit, they looked at this and they commended the whole operations team for the significant milestone. So the mantra here is to be able to effectively articulate the expected benefits of the new feature that is measurable. And once that is done, cooperation will flow to us from all the stakeholders. I am very confident of it. We have done it in the past. We'll do it again.
Fantastic, sir. That's a very, very nice example also you gave. And really, this also shows that how embedded the audit team is in the operations and how the audit team understands the pain of the operations. You said empathy to patients and empathy to operations when you started your discussion. So I think that really plays a big role in bringing attention to audit issues.
No, Sandhya, a trick question for you.
Oh my God.
Normally, in many organizations, if we leave the corporate alone, right? They are a different body. The regional and unit finance roles are normally reporting into the operational heads. Even in our organization, it is so. Now, do you see this as a role conflict, given that the finance function has also got the custodianship, they have got the compliances, right? What happens if the unit head wants to report more revenue in a particular quarter? Will the finance lead be able to handle that kind of pressure and do the right thing, especially when his annual evaluation is with the unit head? What do you feel about that? Is it not a risk for the organization?
So even here, you're asking me all difficult questions. I thought that only happens in the audit committee. But let me
everybody's benefit. This has been always plaguing my mind, Sandhya. So I thought it is the best way to elicit a good response from you.
Let me attempt an answer. Now, I want to take a step back, and we spoke about enterprise risk management framework. Now, we look at risk management framework or the internal audit process as an overhead, something to get done with, some tick box we have to do. But really, a risk management framework implemented in the right fashion in an organization gives the biggest enabler for people who have to have this conflict, because one is many of these roles are reporting into the line organization, because that's when the organization can work cohesively as a team and deliver the outcomes. But at the same time, some members in these line organizations also have priorities, which are, of course, organizational priorities, but they're not as strongly measured as, say, a revenue. Somebody keeps looking at revenue and margin and cash flow day in, day out. But someone does not look at enterprise risk day in, day out. So, which means that, or someone doesn't look at compliance day in, day out. So, to that extent, when there is a top of the mind recall of behavior or actions or thinking, some of these priorities can get defocused, which is where the strength of how strongly the risk culture is embedded in the organization into its leadership at a line level is very important. That gives power to these functions to be able to express their view in a safe environment. Now, having said that, it is also very, very important that there is leadership alignment to the control framework. One way we have implemented is there are management rep letters, etc. Every senior leader in the organization signs off a rep letter on the control framework, etc. But it is more beyond that. It's top-down ownership. ownership of the problem, ownership of the control environment. So, for example, if say there is, I'm just saying hypothetically, if there is some finance head who's being pushed to take a revenue entry which is not correct, then it is important that the CEO's office, the CFO's office is able to provide that air cover to that finance head. Yes, yes, that their appraisals are not impacted, that they don't get unnecessarily penalized for doing the right thing, and rather they get rewarded for doing the right thing.
Culture for openness becomes very important.
Exactly. Culture for openness becomes very important. Now, but having said that, it is also the role of the finance leader to find that right balance in the way they present and express things. They can't take one stick and beat everyone up saying, I am compliance. If you come after me, the CFO will come after you, or I have the CEO's backing. No, you can't do that. It's very much similar to when you gave that answer to the audit committee question, where you have that role of being the conscience keeper of the audit committee, but you also have the role of presenting the management in the right light to the
balanced view. A balanced view always. Yeah.
Exactly. That's what really gets the right win-win outcome for the organization. Now I want to move to take a different track, completely different question. Okay. Many times when I speak in CA campuses and I speak to a lot of youngsters who are fresh CAs. Many youngsters,
speaker, yes.
Many youngsters today feel that a career in internal audit is not as energizing as business finance. Sometimes I even get LinkedIn messages saying, internal audit or business finance? Internal audit, like that. So, I do have a point of view on that, because I've been an internal auditor and then now I am managing finance, so I have a point of view to that. But since you always have a very nice perspective, I want you to share your views as an audit head on what should we do, and what is your views on this perspective that internal audit is okay only from a career point of view.
See, the internal audit has never been a very glamorous role. I appreciate what you're trying to tell me. For this, I can only blame ourselves as leaders in internal audit. Okay? We are not articulating enough. We are not communicating clearly enough. Look at it like this. Which other profession can give the rank fresher opportunities for unlimited travel at no personal cost? Unlimited learning of an industry from an insider's point of view. Endless opportunity to improve on their personal interaction skills, right? Without any cost, right? I mean, without any liability for mistakes, right? Rub shoulders with all levels in the organization, from the humblest housekeeping right up to CEO. In our case, even the chairman interacts with them, right? Another aspect is that, from our side, we should also be able to show them a very clear career path. That's where I think many organizations miss out on the recruitment of good people coming into internal audit. Say, for example, after 2 years stint in internal audit, where is this career going for this fresher? If we can provide this clear pathway and walk the talk, that's very important, right? Talking is cheap. We have to walk the talk. And then let others in the organization, in Narayana, people who have been in this path and then taken on various beautiful roles, let others in the organization who have walked the path before and succeeded, if they can talk about this journey, elaborate on what they have gone through, then we'll never face a dearth of talent for this particular function, right? It's a matter of how we explain what is internal audit and what it can give them. However, the proof of the pudding is always in eating. Sandhya, you are one of the youngest CFOs for a much admired listed company in India, and you have been in audit head before. I want to hear from the horse's mouth. Please share with us this wonderful journey of yours, and how do you think the career in IA help you prepare for your current? That will be very interesting for everybody.
Sure. Thank you, sir. So actually, it's an interesting thing. Before I took the audit role, I was the CFO for one of the business units in Wipro Limited. And then this audit role came up. And then I put up my hand saying, I want to do internal audit. Okay. So everyone was like, you are a CFO for a business unit. You would want to move, to a different role, which is more business finance. You have
No, I
so much.
understand, Sandhya. You want to start asking questions instead of answering them. I understand that. Yeah, yeah. Okay.
The question that people asked me at the time was, why do you want to do internal audit? So I said, it is one part in my career web that I have always wanted to do, mainly because audit is one function that gives you a 360-degree view of the organization. Secondly, in audit, the soft skills that you build are absolutely of an impeccable level. So you have to face the CEO. When you go into an audit committee, you have the CEO sitting in that room, you have the audit committee chair sitting in that room.
Sure.
You have to pick the point that is wrong with the business, present it to the audit committee chair in a way that you are able to provide the assurance to the audit committee that the control is being put in place. At the same time, you're not putting the CEO in a spot that the control has failed, or the CFO in the spot that the control has failed. The softer aspect of managing audit, we cannot underestimate, and at every level. At the time,
Saap bhi mare, lathi bhi na toote. For our Delhi friends, yeah. That's what they call this, yeah.
Exactly. That's a very important aspect of the audit role. The third aspect of the audit role is that it is one role in which you don't have any business pressure. So you can get to the ideal outcome. So if you ask me, like your own example of that barcoding of medicines, I have thousands of reasons why it cannot be done.
Sure.
But as an audit head, I have to find that one reason how it can be done.
We still need to chase that. Yeah, correct.
Yes. Find that reason and chase. That kind of opportunity you don't get in business finance because you're overburdened with the difficulties of what cannot be done. So personally, I feel that stint in audit really set me up to be able to take over as the CFO of the listed company. It gave me the exposure to the board and audit committee. It gave me the right articulation, presentation, soft skills that came with it. It gave me the process skills. We underestimate the importance of having to be able to build processes in an organization. See, we are all very valuable employees, but we cannot hold the organization together on our shoulders. The processes of the organization hold it together. We ensure that the processes run and keep improving. So it gave me that process perspective of how to put a process in place. And finally, it gave me that perspective of now when I am sitting in a finance CFO position, how can you leverage audit to your benefit? There isn't a thing I haven't dumped on Shrikant sir to say, sir, please solve. That collaborative working. Oh, I think this issue has come. Even when we were recently, GST was introduced in healthcare, and it was a very complex modeling for us on how do we build it in our systems, because the law was very ambiguous. So
it always is. It always is. How will the lawyers make money otherwise? Yeah, and CS also. Yeah.
So instead of sitting investing my effort and spending hours and hours on solving the problem, all I had to do was send one simple mail to Shrikant sir and said, sir, please figure out how this system should be structured. And the counseling advice and ownership I got from him on that issue really solved. I think we have done whatever we can do given the understanding and circumstances of the law. But because he could bring you, because you could bring into this conversation the perspective of what can go wrong if we do this, how we should do it correctly. So really, having been in the audit shoes.
There is no correct or wrong. Basically, we have to look at what is safer in the long run. That is the perspective that we can take here, isn't it? From a risk
correct.
Yeah.
Correct, exactly. Yeah. So that where you can stretch the boundaries of the audit head and leverage the support of the audit head. I think that has helped me from that perspective also.
Great. So I will take a cue from that and try and see if there is a further possibility to expand the audit role. So traditionally, if you look at the pillars of audit, we always look at compliance, process, and efficiency improvement, right? These are the three pillars. Can we add a fourth pillar called as training? Can the internal audit department be a very structured source for manpower for the finance and operations departments? Or do you think that such a KRA will cause more of an attrition within the audit function and therefore will be a problem in running of the department itself? Am I getting somebody trained very well and then giving them off? Will it trouble my function or will it help your function or operations functions more? How do you find this balance? And do you think is a doable option?
Sure. So when I started in 2002, I passed out. And, from the campus placements, at least 50 to 60% of the companies, all very reputed companies at that time, they had invited applications to the internal audit team. If you take any management trainee program, and I'm not very close to the campus today, so I'm not sure how many companies come and hire their management trainee program inside internal audit. But definitely, most of the companies that came into campus in my time were hiring into internal audit. The reason being that it is the best place to learn without operational responsibility. You can understand everything without the fear of making mistakes, like you said a little while
Honeymoon
earlier.
period, yes, honeymoon period.
Honeymoon period, yes. And more importantly, it is also a place where you are learning a lot of soft skills, which take people really long in the organization. Now, having said that, there is a perspective that, if people keep coming and going and the internal audit team works very hard and trains the team members, and then you're waiting and watching when that 2-year period in internal audit will get over and go bring the resource out. Then again, they have to retrain. So
Wow.
I feel that in the internal audit function, as well as in the organization itself, the knowledge management and knowledge transfer processes have to be very, very strong. We need to have effective documentation and work papers. So in my role as audit head, because I used to anchor the management trainee program, so a lot of the management trainees used to come into my team and then, we will then release them into business. So one of the things I used to do before any audit closes was to go through the work paper and see whether all the controls to be tested, all the test steps to be performed are clearly documented. Because only then, when the next person comes and picks up, the learning is there. Secondly, the organizational knowledge repository has to be strong. All processes have to be documented so people can learn. Now, finally, people make mixed career choices. Not everyone wants to go into business finance. Some people want to become career auditors, want to become audit leaders in the long run. So want to specialize in audit. So we should have a mix of talent, have some people who want to build a career in audit. So therefore, there is some continuity, and have some people who come in, get the benefit of the internal audit department, learn and go add value to business. I think that's the ideal model, according to me.
And there will be some like you who go into finance and then come back to audit and learn something again and then move ahead. That is another aspect too. Yeah. Okay, so on that note, it is a leading question from whatever you explained right now. Maybe partially you answer it, but maybe there are some perspectives which possibly I would like you to add there. You see, you have moved from an internal audit role to taking charge of a CFO of a listed company. Traditionally, internal audit is all about compliance and possibly saying no as often as possible, right? That's audit, right? And the CFO is more of a business enabler. How difficult was this transition? Did you have to unlearn something?
Yes. So, like I said earlier, the internal audit role was really a feeder for me into the transition. It did enable me for the transition. But few learning or unlearning or whatever you call it, for me from audit to the CFO role is that in the audit role, while you can take as much supportive role in solving the problems, in the CFO role, really the buck stops at you. So, which means that you have to take that step up to say that there is nobody else to go and complain to go and say why it cannot be done, to give an explanation on what you did not do. Really, you have to solve. So that was a big step up for me. The second important step up is prioritizing multiple situations, because while the audit may be 100% right that the issue has to be solved, Sometimes you may not have the resources to solve. Sometimes you may not have the team to solve. So then you have to commit to the audit team, take time from the audit committee, find the solution, follow through. So how do you prioritize what is important, what we put ahead? And finally, we have to bring leadership attention to issues in a way that on a progressive basis, we are able to solve those issues through the line management, and audit does not have to come and bring it up. So these were some of the learnings, or which I had, which we can build on top of my audit experience to be able to work in business finance. So,
a great transition that you have elaborated. That's really nice to know. It's for many people to learn the possibilities of saying that, be it audit or be it the CFO function. It is all about how you are willing to learn and adapt to whatever is the current need of the organization, and that is where the real strengths come out. I think you explained that very, very well.
Thank you, sir. At this stage, I had another poll, but since people have not made their coffee yet and there are no questions that are coming on the chat window, I'm skipping my next poll. Though I will still look forward to questions from the audience. I will be asking questions till some question comes up on the chat window. But until then, maybe I will, proceed on to ask one more question to you, which is that technology skills are becoming very, very core to finance. You've been the CIO before. What are the technology skills one must learn to be a good internal auditor?
See, gone are the days when only spreadsheet skills will see the internal auditor through, right? So those days are over. We can't really rely only on the pivot tables and to look up tables to say that I know Excel so I can do audit. The technology space is changing so rapidly that even to understand what to learn is a very difficult position, right? But one thing we can look at as an aspect is to think that, one need not have to understand how technology works in order to be able to use the technology. That's where some people make a mistake, right? They go deep into technology. I don't think that's required. After all, we have been driving cars for a long time without knowing the difference between an alternator or a carburetor, right? So we don't have to really know how and why technology works as long as they are adapted using it. That's the line I would like to draw for the internal audit. See, for example, how to use the big data and artificial intelligence in our day-to-day work can be a very useful skill for today's auditor. See, audit often involves understanding what does not seem right in a vast volume of data, an anomaly or a pattern which you cannot normally spot very visually. It is very difficult when there are millions of lines of Excel lines. What do you do with that, right? Also, it may not be a single factor, but a combination of circumstances that need to be attended to or looked at carefully. I will share some live examples from healthcare because I think maybe that will help the audience relate better to what we're trying to convey. Right, in spite of the great strides we have made in the last few years with digital payments, healthcare business still has to deal with significant amounts of cash transactions with all the attendant risks that come with that. Earlier, if I were to check if the refunds have been made to a genuine patient, I would have to draw a sample from all the refunds made on a set criteria, right? I didn't have too many choices. Today, on top of our hospital information system, we have a beautiful BI system sitting on top of that, right? So therefore, we have the luxury today to feed a much more complex logic for drawing the samples. For example, I can ask for refunds made in a cash mode for a particular period across a group of patients who did not have any other episode at the hospital for a follow-up consultation or diagnostic test. What is the logic here? It is very rare for a patient to travel to the hospital only for collecting a small refund. So if you see a 500 rupee refund happen normally, maybe 2-3 times in a particular hospital, for a patient who did not have any other episode there, I think that maybe there is something wrong with that refund. If somebody pocketing the money is a thought. Possibility of finding a non-genuine refund with this logic in place dramatically increases, right? So that is where the BI and AI can be practically used. Another, to draw on the same example, suppose I want to understand if there is a significant difference in the percentage of refunds made by a particular user compared to the volume of transaction done by that user. Today, BI can immediately give me that data. I don't have to do any Excel pivot and stuff like that. I write or I will request the BI team to understand this logic. Once they understand, for any period, any location, any time, I can just pick up the data in 2 minutes. right? Another logic I can feed is to look at the time difference between date of receipt and the date of refund. Is there a long gap? If the gap so long that the patient had definitely forgotten about it, but still there is some refund happening in system, can he talk to that patient and find out if he really got the money? Averages rarely lie. And and if the BI can be used properly, we can quickly point out the direction where we need to look at in detail. I think that is how we should use technology. Yeah. Suggestion here is to use, we have to be very clear what are the buzzwords. And if they're only buzzwords, we should learn to ignore them also. Learn what you will be able to use for your work today on hand. A futuristic view in respect of technology may not help much, because by the time you find the technology useful, that technology could have become obsolete also. Of course, finally, common sense is the most valuable skill that will never go out of fashion. Combine with everything else to make things work. That's what I feel about it.
Very, very nicely summarized, actually. Common sense is the most valuable skill and most uncommon as well.
Sometimes we feel that, yeah.
Yes, sir.
I think I'm for one more question for you, Sandhya. We just spoke about technology being very, very vital for CA. Do you think that our current syllabus has got enough ammunition? Is it equipping the budding CAs technology-wise? I don't hear too much of the PI, AI, fuzzy logic, neurologic, algorithms seeming to figure very high in the threshold that we get to meet. What is your take on this?
Sure. So I think there are 2-3 aspects here. One is that the application or usage of technology in each organization is very different. So it is very difficult for the curriculum to say, I want to teach this technology. So we can't, for example, introduce Power BI into the curriculum, because the Power BI maybe will be useful some places, will not be useful some places.
Yeah, it's too specific, yeah.
It is very specific, and usage of technology is very non-standard. I think one area where the institute should invest time and effort is to be able to build data consumption skills in the in students. Now, doesn't mean what people, today you have Udemy, you have various thousands of online portals on which people can go and learn whatever they want. The institute doesn't have to teach that, but people have to learn how to work with data. How do you apply logic on data? How do you analyze data properly? Data consumption skills is a very, very important skill, which institute may teach. Also, in some form, institute should put some pressure on the practical training. CA curriculum is the only curriculum which brings practical training along with the educational equipping people from a conceptual point of view. One of the reasons why CAs are in so much demand.
We lost you.
Can you hear me now?
We lost you in the last few seconds, yeah.
Okay. Can you hear me now?
Yeah, yes.
Sure. One of the reasons why there is so much demand for CAs is because of that practical experience that they get. So there is some work that can be done by the institute for people to be able to equip themselves to work with data better. Now, having said that, the most important thing is a learning attitude from the individual.
Great.
Everybody can self-learn. That attitude that I want to learn, I want to do something different is what drives, makes someone better, makes someone learn, and makes someone use those skills. The other thing which I normally advise people to do is, you can learn thousands of things, but until you actually execute it, it won't stay in your memory. So don't go into some Excel training course, learn some 200 formulas, and keep one book in which you will search for the formulas next time you want to solve. Pick 5 or 7 out of those 200 formulas, take some practical problem and solve that at workplace. That problem, that formula will stay with you for life. So I think also a lot of effort we have to do in terms of learning ourselves. Now, finally, people have to realize that technology is a very, very, very important skill. Just because you know all the accounting standards, you can say section 1 to section whatever now in the Companies Act, is not going to make you successful. It is important. It gives you a good conceptual framework. Your ability to work with data, work with information, work with numbers is strongly dependent on how good you are with technology. And therefore, people have to invest that effort in equipping themselves. With that, I think we are still not getting any questions on the chat. Okay. So I think we should then lead this session to a conclusion. Though, because we have 4 minutes, because if you will permit me, I do want to ask one small last question to Shrikant sir.
Yes, I'm sure.
Okay.
As an auditor, you need to have a sharp eye to pick up issues which normally get missed. So I want to know from you, how does one build those skills?
See, I have always believed that, in addition to the devil, the angels also reside in the details. Nothing is done. I mean, the chairman can have a vision, but everybody else should be details people, right? So details need a lot of work to be done, right? So an eye for detail is both an innate as well as an acquired trait. It is a combo of both. But today, I think the technology seems to be leveling the gap. So you don't have to worry if you don't have a natural flair for details. We can, as long as we can learn to harness technology like a BI and the AI to do this particular job for us, right? So that's where the gap can be bridged easily. Coming to this other aspect of this business acumen, that's what really helps you do a good job. I think that is largely a matter of interest that you show for the job at hand. What you call as business acumen is an ability to have a sustained interest in what is being given to you, and therefore you will learn more about that. So recently I was happy to interact with a fresher who came and told me that he wants to actually visit the operation theater while a cardiac surgery is in progress. Now, this guy will surely learn more about how materials are handled and what can go missing in the stores next to the operation theater much faster than his other peers, right? Because he has that acumen to learn. Once he has the acumen to learn, the knowledge will come to you. It is there in the cosmos. You just need to keep an open mind and show your intent and interest, and it will come to you. You cannot go wrong as long as you acknowledge the worth of experience and keep an open mind. Another good methodology for us to develop this business acumen would be to benchmark all our organization's activities in respect of whatever we do, whichever is critical to the organization, with the industry leaders as well as the laggers. From the leaders, we will know what we are not doing today and what we ought to be doing. And from the laggers, we will know what to not do even in the future. I think that's what we have time for today. Yeah, we are almost at the end of the time allotted for us. So thank you very much for this opportunity. It has been lovely. Thank you for all the support from all of you. Over to you, Sandhya.
Thank you.
Thank you. Thank you, Vikasji. Over to you.
Thank you, Sandhya ma'am. Thank you, Shrikant sir, for this very unique idea of coffee pe charcha on a webinar. I personally found this session very interesting, and I'm sure everybody else must have learned a lot. We look forward to be part of such conversations more often. Thank you. Thank you once again.
Thank you.
Thank you. So now comes the time for the second session of the day on the topic, how the internal audit function is metamorphosizing to meet emerging business challenges. The session would be taken by Shri VGVS Sharma sir. Mr. VGVS, as he is generally called, is a retired BCom honors CMA professional with more than 34 years of industry experience, with expertise in government, enterprise risk, compliance, forensic, and business process consulting. Industry experience span Big Four consulting, manufacturing, telecom, IT technology, retail, and travel with wide international experience. Some of the key organizations that he served includes Tata, Godrej, Escortel Mobile Communication, Aircel, Deloitte, and HCL Technologies Limited. A passionate speaker at various forums on wide-ranging topics on internal audit, enterprise risk, and forensic. Post his retirement, he is currently running his own management consultancy firm. Welcome, Sharma sir. Can you hear us, Sharma sir? We can see your screen.
Sharma sir is on mute. He'll have to unmute first. Yeah.
Okay, just give him a second. Sharma sir, we can't hear you currently.
I can see a mute signal there.
Okay, I'll just ask the technical team. No, sir. Can you please unmute? We can see you speaking, but your voice is not coming. No, not yet, sir. We can see you, we can see the slides, but can't hear you. Have you tried unmuting yourself? But we can see that red mute sign on your screen. No, no voice, sir. No, can't hear you. Can somebody from the technical team help us?
Can you hear now?
Yes, yes, sir. We can hear you.
Yeah. Right.
Yes, yes. Thank you, sir. Thank you.
Yeah. Okay. So one second. Is the screen visible?
Yes, sir.
Okay. So I think it was a wonderful session, something completely different. A very good evening and a warm welcome. Thoroughly enjoyable session, and the way it was conducted was very unique. And some of the questions that were posed were really very interesting. And I'm sure, I think they have already covered a major portion of the topics that are covered in this session. Feel free to ask any questions that you have so that I can answer at the end of the session. Unlike what the earlier panel have said, I'm a traditional auditor. I've been an auditor all through my life for more than 34 years. So my approaches are something completely different. What I'm going to share with you is the experience that I have gained through these more than 3 decades of being an hardcore internal auditor, and how the function has evolved over these 3 decades or 3.5 decades approximately. And we'll start with the primary objectives of internal audit. What is the primary fundamental purpose of having an internal audit in any organization? As you're all aware, it's for safeguarding of assets. Now, one of the fundamental things, before I start up with the presentation, I wanted to give you a brief background that every organization, and more so a listed organization or any organization, it could be an entrepreneurial kind of a thing, if it's a closely held or a widely held organization, have an investor, you have a shareholder who put in their money, and it becomes the responsibility of the board of directors and the management to make sure that they manage those funds appropriately and for the optimal benefit of the shareholders. But the management is responsible for implementing the actions or the decisions that have been taken by the board. Board becomes responsible as a trustee to the shareholders. Now, they need somebody who is independent of the operations to come back and tell them, hey, board, I have reviewed all the key risks that have been identified and the mitigation plans that have been put in place to mitigate those risks. And they are working efficiently or effectively the way, depending upon the nature of the control that you're testing. And you give that assurance to the board that, yes, I think that way the risks are getting mitigated the way they are being mitigated or they ought to be mitigated. So this is fundamentally the primary objective and purpose. Now, some of the areas, primarily the areas that internal audit would be interested would be safeguarding of assets, reliability of financial statements. I need not have to elaborate this because you have seen number of white collar crimes. Now the question is, did internal audit fail? We have seen number of white collar crimes which have happened in the recent past where the shareholders have been taken for a royal right. Now, did internal auditor fail in disclosing some of the wrongdoings? Compliance to local laws and regulations, which have been touched upon by the erstwhile speakers as well. Efficiencies, again, this aspect has been touched upon. Now, are there leakages? Most times, you hear the management say that, oh, we are making money, so why should you really worry about auditing this area? Could we have made more? Are there any potential leakages? Could there be any potential fraud threats? Those are the things that you need to look at when you evaluate a particular process. Detection and prevention of frauds. While it is not the primary responsibility of any auditor, be it internal auditor or external auditor, to detect frauds, there is a lot of debate on this particular point. But let me tell you very clearly, a fraud risk assessment or a fraud assessment or any assessment, including internal audit, that you do is something that you do at a particular point in time. And therefore, if something happens, because most times what happens, you dress up the bride and then present the evidences or details to you as an auditor, because you provide advance notice, you issue an engagement letter, post which you actually go ahead and conduct the audit. So you do not want to be hit by surprises, because you actually evaluate based on the information details that have been provided and the tests that you carry out at that particular point in time. Now, if any of those conditions change, then you cannot be held accountable and responsible, and therefore, in your audit report, you have to very clearly call out the scope, the methodology, the approach that you have adopted, the period that you have selected, the sampling techniques that you have selected. All of that becomes so very critical in case if there is any potential incident, or in case if there is an incident, and if you have to cover your backside, then all of this will come in. They become very important. Business continuity. Of late, this has become one of the key risks that organizations are grappling with. And we have seen that during the COVID times, and a lot of these uncertainty because of the natural elements. It could be floods, it could be earthquakes, it could be riots, it could be any of these, and we have seen it all. Safety and reliability of data and information. This is again gaining traction as more and more digitization takes place, as technology develops, and of course every technology will also bring with it its own set of vulnerabilities and risks, and which exposes the organizational data, and it is prone to leakages, and beyond leakages you also have these ransomware attacks, and I'm sure, I think you have heard about it globally, where organizations have been very, very badly hit with ransomware attacks or DDoS, denial of service attacks. So we have a bunch of those things, especially in the IT space. So let's look at the historical versus the current approach from the internal audit perspective. Used to be a cyclical coverage. You used to have the entire audit universe, and then you would segregate them into high, medium, low based on certain judgment, and there was a lot of subjectivity that was involved, and primarily it was only the management that was involved in the discussions, and the board reporting thing came much later. Earlier it was a management function, reporting directly to the management, and therefore so you would segregate them into high, medium, low. High you would cover once every year, and probably medium once every 3 years, and the low risk ones probably once every 5 years. So everybody would know that once the audit has happened, the fellows are not going to come back. Fellows meaning internal audit fellows are not going to come back for the next 2 years or 3 years or 5 years. That is also the biggest risk. So that's a flaw in terms of the approach. So that was there. Whereas slowly we are moving towards a rolling audit plan, which means that every quarter you review the audit plan and see that whether the plan is still relevant, or whether some elements will need to be dropped, and then because more urgent things have come up or more riskier things have come up that you need to look at. So you slowly have adopted to rolling audit plans. It used to be purely controls based, so it was never risk based. While risk and control are two opposite sides of the same coin, it used to be more of controls that you will check all these controls whenever you pick up an audit area. So it was purely controls based. Now it has become risk based. We will discuss this in a little more detail in the subsequent slides. As somebody rightly said, as my earlier speaker rightly said, it used to be purely ITGC, very, very limited, because everything was in manual form. I remember when I started my career, computerization was just happening. And at Tandas, we were trying to build a paperless office. And that was, I think, one of the best that I've ever seen in any of the organizations. And the entire thing was built in-house, where not a single paper moved from one desk to the another. And it was a manufacturing unit. And you can imagine the complexity of the entire manufacturing process. You had a shop floor, you have work, you had costing system, then you had subcontracting, you have job work, you name it, and it was there. And all of this was complete. The stores was exceptionally well managed without a single paper moving from one desk to the another. And the kind of audits that were involved were purely around your access controls and all of that. So nothing fancy. Then in the present day situation, you talk about cyber. So cyber is anything, is nothing but, any information that is in digital form that resides in the computer is prone to a cyber attack. Privacy laws have actually come in, and each country has its own version of the privacy law. And I'm sure, I think we'll have one soon in India as well. Business continuity is another issue, because you do not know if any critical system goes down, then what would happen to your operations, how badly it would impact your business. Information security. For example, if you are managing client information, client data, how safe and secure is that? Can that be prone to thefts, either by an insider or by an outsider? Then your entire vendor risk, in case if you have outsourced, if you have subcontracted, then how is your vendor, whom you have subcontracted the work, managing the risks? Unlimited local, it used to be purely localized because internet was not prevalent in those days. So pretty much everything was localized system. So whatever that validations or checks that were happening were all on your local systems, local servers. So whereas I think now we have moved to a cloud, then you have internet protocols or technology, you have third-party risks which have actually come in, then you have SaaS-based applications. So now the complexity has actually evolved. And then internal audit was primarily to meet your CARO requirements. And I have seen it all, an external auditor would come in and say, what was your coverage and what is it that you have done, any key issues? That's it, period. And he would actually mention in the CARO report and everybody was happy. Now things have changed. There is a lot more responsibility on an internal auditor in terms of providing an assurance to the board, because board then will become responsible. In the Companies Act of 2013, there's a particular clause called Director's Responsibility Statement, whereby any significant control issue will have to be reported very clearly in the Director's Responsibility Statement. So because of these reporting requirements, because of these amendments, there's a lot more pressure on the boards and the management to make sure that they have put adequate controls in place. It used to be mostly in-house team. We never had either co-sourcing or an outsourcing kind of an arrangement, when we started. The audit function, it was purely in-house. It was a management function, and then everything was done. You report to the management and then to the external auditor. That's it. Beyond that, there was nothing much which was happening. Today, it's a hybrid kind of a model, which means you could have a co-sourcing kind of an arrangement. You can have an outsourcing kind of an arrangement, or you can have a mix of both. So it's more of a hybrid model, which it has evolved into. Management, as I mentioned, used to decide the scope and coverage because it was a management function. But today, management is going to be one of the arms which actually provides us inputs. So there are multiple drivers basis which you prepare an annual audit plan. You talk to your outsourcing partner, you talk to subject matter experts, you talk to your peers within the industry, you talk to your external auditors, then you talk to the management, you have the audit committee. Of course, now you also have an ERM function. You talk to them about some of the key business risks that the organization is exposed to, and then you bake all of that into your audit universe, and then you carry out what I call as risk evaluation or risk prioritization. So there is a detailed exercise that we do, and it used to take about 2.5 months before you actually finalize your bucket list that include as that. It is again a draft audit plan, I would say, because nothing was cast in stone. And then this is subject to review every quarter to make sure that all the key business risks are included in the audit plan. So as I mentioned, the takeaway is that from a management assurance to the board and a stakeholder assurance, that's how the journey has moved. And then it used to be, if you look at historically, the data, evidences, everything was in document form. But today, everything is digitized. You would see them in electronic form. That's how the transition has happened. And therefore, your audit approach, your audit methodology, everything has undergone a change, the way you audit today. Then the other problem, I think it was also touched upon when somebody was questioning about whether the auditor can take over the responsibility of an ERM. Now, ERM is actually a second line of defense. The first line of defense are the ones who actually manage the risks on the ground. Third line and independent line is the internal audit. Now, internal audit has a responsibility of making sure both the first line and the second line are working well as an independent function. The responsibility of the second line is to support the first line. So that's how the three lines of defense have been defined, and the roles and responsibilities also have been very clearly defined. Earlier, there was we did not have this concept of three lines. Even an internal auditor would prepare an SOP, he would prepare an RCM, he would do everything, as directed or as asked by the management. And it definitely it had an inherent conflict of interest. And so these days, currently, you have a very clearly defined lines of defense, along with the very clearly defined roles and responsibilities. So you know for sure what you can do, what you cannot do. As part of your third line. And mostly it used to be checklist based. Traditionally, it used to be a checklist based kind of an audit, whereas I think now it has become more, I would say, more real. You simulate a real situation. For example, when we were doing cyber assessment, we used to deliberately drop pen drives which had pre-written programs. And typically, the human tendency is to, whenever they see these isolated pen drives on their tables or in their workplaces or in the canteen, we have this habit of picking it up and then stealing it and plugging it into the laptop. And then the moment he or she does it, you would get an alert that, this individual on this IP address has plugged the the pen drive. That is a big risk, because any malware, which with an embedded malware, and if somebody actually picks it up and plugs it into a laptop, it's very easy for you to infect the entire laptop or the entire community. So therefore, this is part of the employee behavior that we were testing as to, even though you conduct a lot of these trainings, practically how does it happen on the ground? Do the employees really understand what they do? We used to send out a lot of these very, very fancy mailers and very, very attractive mailers, emails, looking for an employee response. And we have seen pretty much everybody failed. So everybody would open these emails and then go through it, and then we would get an alert that, these individuals have opened. So the trainings also will have to be very practical. It has to be regularly, and you have to make sure you explain to them as to the kind of risks that they pose to the organization, either as an individual or collectively as a group. So these are all simulated attacks. So these are all, by and large, some of the things that are actually captured in terms of the key changes that have happened over these 2-3 decades. Now let us look at some of these things in a little bit more detail. Now, how has the internal audit approach changed? Well, as I said, as digitization's pace started catching up, the way we started auditing either an application or a network or your servers have all undergone a significant change. Even the data. Earlier, it used to be purely sampling based, and then we used to pick up on a random basis or whatever basis that we would decide, because sampling in itself is a huge subject, because a lot of factors will have to be considered when you select the sample. In terms of, for example, when you want to decide how you want to draw the sample, you might want to look at whether there have been any significant changes in that particular area, whether new applications or new systems have been introduced that area, whether significant changes have happened in terms of the people. A lot of people, new joinees or attrition, whether that could have impacted, whether the process is documented or not documented, whether it is manual or semi-automated. or it is individual dependent or process dependent. I mean, bunch of factors. So we will have to document each of these and then decide as to what is the kind of a sample that you would like to draw and what is the period during which you want to draw what kind of a sample. So that when you actually select a sample which is not homogeneous, it should be able to represent the entire population. So that, you know, when you extrapolate, it gives a reasonably good picture that, you know, this is what was happening across the entire population. What technology or what digitization has done to Audit is that we could build tools, or we could buy tools, or we could implement tools that we were able to do earlier. Now, some of the tools that are available today is that when you run an audit or when you prepare RPAs, you know, we call it as robotic process automation, even though there's nothing robotic about this entire thing. It is all coded. It is a code written thing, but then it sounds very fancy and nice, and therefore we call it as robotic process automation. What it does is that it can actually read multiple formats. When you perform an audit, you don't have to physically look at a particular document. All you have to do is create those templates for each of the nature of documents. For example, if you have, say, 10 different hotel bills in your repository, which is in digitized form, all you have to do is create the template for those 10 different hotel bills. And then once you do it, which is a one-time job, all it does is that once it, you know, it picks up a sample, either through they can pick up a sample randomly on their own, or you can actually define what kind of how to draw the samples. So once the samples are picked up by the application or the system, it can actually do the validation across various formats. Now it could be in PDF form, it could be scan form, it could be picture form, it could be in any other form that you want. All it does is that it can detect as to what is the kind of form it is there. It has its own OCR, optical character reader, and it then picks up and then validates and gives you a report. So what happens with this is that earlier, if you picked up about 1% of the sample, so you had about 100,000 population, you could only do what, 1% or maybe 0.5% or maybe even less, depending upon the complexity. And then getting this information data itself is a Herculean task. They would not be at one place. So one of the advantages with the digitization is you can actually run this on the entire data. This is one of the things that can happen. The other thing which has happened is that there's something called a SIM. I'm sure you would have heard, and especially from the IT audits. So what it does is that it is an application which actually identifies any intruder. It's basically intruder detection system. If somebody is trying to hack into your network and somebody is to gain entry, it immediately throws up an alert. Or if somebody is trying to gain an unauthorized entry within the organization into an application or a system that he or she is not authorized to gain entry, it immediately throws up an alert. Now, these are all based on artificial intelligence. So, in fact, it is nothing new. Artificial intelligence existed even when telecom was newly introduced as part of the fraud management system. And most of those fraud management systems were built on neural technologies. They're called neural because they mimic a human brain. So what it does is that they call it as a call fingerprinting. So depending upon every individual, he or she would have a particular call pattern, that an individual is calling only certain numbers or making calls to certain set of persons or making calls during a certain time frame within the day or within the night. So the moment, somebody, for example, somebody is living in, say, Delhi, and all through, and suddenly, the system picks up a call being initiated, say, in Dubai or in some other geography, immediately throws up an alert saying, I suddenly see somebody making a call from Dubai. Could the SIM have been cloned? Has the phone been stolen? Is this a bona fide call or not? Immediately throws up an alert, right? So that's how we call it as a call fingerprinting. So neural technologies, artificial intelligence pretty much existed even in those days, but it has gained traction now. It is whatever routine things that, or even complex things that humans who are doing today can be done by the artificial intelligence. And SIM is one such thing because intrusions can happen through multiple ways. So when it is connected through the network, what happens is that if it detects any unusual activity, it immediately sends out an alert saying, you know, I see an unusual activity, so that somebody can go ahead and investigate. So it becomes a continuous monitoring thing. It's not something that you do once in 2 years or, you know, once in 6 months or whenever it feels like doing an audit, he or she goes and does an audit. No, not like that. Because some of these are very, very critical. So the audit itself has matured now. So a lot of organizations have implemented, and especially the IT organizations, they all have implemented this. But then it requires huge volume of data to be able to prepare those fingerprints, which means that who all, for example, let's say some individuals are authorized to access certain applications. Those individuals have certain rights. So those individuals will keep accessing those applications, perform certain tasks. What it does is that this individual logs in at such and such time, he performs these tasks. Imagine somebody either steals a password or a login or user ID and then logs in and tries something different. It immediately throws up an alert saying, you know, this fellow is not supposed to be doing these because this is what my historical data tells me. And now I see something completely different happening. And then in AI, what happens is that you can also feed your response in terms of what the system can do. Either you block the user or you immediately send out an alert or whatever action that you want the system to do. Again, there is a process by which the system selects it. It's all on the basis when it creates a library and based on the success rate. We will not discuss it due to paucity of time. Focus on exceptions. There was a time, you know, when you pick up a sample and let's say you picked up a sample of 10 and out of this 10, maybe one, you know, you found a problem, rest 9 were clean, or maybe all 10 were clean. So, but maybe there is a problem which you could not pick up, or you could not pick up as part of your sample. And therefore, there's every likelihood that a potential fraud or an error could have been missed out. The moment you implement technology, that risk is to a very large extent. I will not say that it will completely negate that risk, but to a very large extent, you mitigate that risk. The reason why I'm saying it would to a large extent and not 100% is that can somebody go and change a rule within the application? If you do not have very strong governance and IT related controls around those applications or change management, somebody can go and change a rule. And this has happened in the technology, the telecom company that I worked. People made configuration changes in the switches, because of which what happened, an international call was being rated as a domestic call. And you can imagine the kind of a loss that the company has suffered. They also made changes to suppress generation of CDRs. These can happen. Even today, it happens in IT systems where somebody, you know, in the name of, you know, hardware processing pressure, hardware sizing, they would say that, you know, they will suppress generation of logs. Now, logs are so very important. If somebody is actually accessing certain tables or certain configurations which are highly critical, or you know, we call it as a super user access. And if you suppress some of these logs, you do not even have a trail in terms of who entered and who did what. Even when you try to analyze logs. Now, if I'm smart, then what I would do, I will suppress the logs, I will do whatever that I have to do, and then I'll re-enable them. So you might actually go and do an audit after 2 months, but you would never be able to know that these logs have been suppressed. Right? Because you do an audit at that particular point in time. That's the reason I'm using this word to a large extent, you know, but these would be taken care of. Multiple data formats and structures is what we have just discussed through use of RPAs. Predictive models, I think this is also gaining a lot of traction, especially in the ERM space and even in the audit space. Now, imagine, you know, you want to look at a certain set of data, very, very precise set of data out of a huge volume of information or data that resides in various formats, right? Predictive modeling, you know, there are applications, there are tools which are available, and then you can also develop your own predictive model. Again, it requires large volumes of data based on either the historical data and then certain parameters that you add, very similar to weather forecast, right? So you can actually predict where can be a potential problem. For example, you know, missing sequences, or you see certain unusual invoice numbers being generated. It could be voucher numbers, it could be credit notes, you name it. So it is all statistical models actually. And then what happens is that you are using technology or you have adopted a more scientific method to be able to identify the area that you want to audit or the samples that you want to pick up. So this is gaining a lot of traction. This is used. This is now being used extensively in the ERM. In the ERM, what is more critical is predicting the possibility. For example, if I knew when I'm going to die, there's no risk here. I know that I'm going to die on a such and such date, and I can prepare myself because I know I've done the impact assessment as to what would happen once I die, and I'm prepared for it, right? So there's no more risk here. Risk is something which you do not foresee. You do not even know when that event would materialize or when that event would happen. And that is where this predictive analysis comes into play, where it tends to predict. I know the impact. Now, if it is catastrophic, which impacts your organization in a huge way, but I do not know when that would happen, when that risk might materialize. For example, a tsunami kind of a thing, or a ravaging flood kind of a thing, or maybe a nuclear disaster kind of a thing. It could be any of these, right? Earthquakes. So if there is a predictive model which tells you that, based on the historical data plus certain parameters that you feed in, then you know for sure that these are the areas that I might want to concentrate, and I want to build a redundancy plan or a contingency plan to mitigate those risks, right? So these are all predictive models, and statistical modeling is what we call, and this is gaining traction these days. Assessment of risk and threats, and this we have seen during the COVID period when we were unable to physically visit any of the locations. Now, digitization, if you have any information on data in digital form, you can sit in one location and perform an audit, because all you're doing is that you're actually looking at the you're doing a trend analysis, and when you have these tools available, it always throws you an exception and says that these are the areas that you might want to look at, which you can sit and investigate even from a remote location. You don't really need to travel to that particular point to be able to do an audit. This was not the case earlier, because we have to travel because everything was in physical form. I'm not saying even for once that today there is no need. There definitely is a need, because once you go and physically see and feel, your perception completely changes. While you might see something in a documented form, but when you see physically what is happening, it's something completely different. I'll give an example. When we visited a particular geography, and we visited a data center. Now, when you read these processes, they look absolutely perfect, because these have been designed by some of the big fours. But you'll be surprised to note that the doors did not have locks. There were backdoor entries, which means that somebody could have unrestricted entry into the data center. Mind you, these data centers, these are the data centers where we were maintaining information and data of some of our marquee clients. Imagine the kind of risk that this will pose to the clients in case if there has been any data theft, or somebody takes away these tape drives. See, tape drive in itself, it doesn't cost you much, but the information or the content in that can actually bring down this organization, right? So those are the things that you actually go and see, physically, visit some of these data centers. If you look at the way you visit some of these data center racks, and you'll be shocked to see that the way the entire wiring has been done, God forbid if something goes wrong, nobody will be able to fix it, because nobody has any clue in terms of which wire is going where. We had those problems. We had ineffective air conditioning. So these are the things you cannot sit and feel from a remote location, even though you have sensors available, but then you have all kinds of explanations given as to why these sensors do not work. So I think those are the things that you can do from a remote. Some of the things, not many things I would say that you can do from a remote location. As more advanced analytics. So again, if it is in digital form, predictive is one such advanced analytics that you can do. You need data scientists to be able to study the data, which again, my earlier presenter spoke about extensively, right? You should be able to understand the story that the data is trying to tell you. It is, so unless and until you understand that information, or unless you are able to process that information, that data in itself become useless. So you really need to understand, and then you can actually perform much greater analysis based on the information that these data sets provide you, or the trend analysis that these data sets provide you. So this is what is the takeaway. So I need to be more agile and forward-looking. So at the end of the day, today, an organization or the board will not feel happy if something has gone down the drain 6 months back. They would be far more interested to know whether something can go wrong on a future date. So these are the things which actually help an internal auditor to help or alert the management and the board that it is good to be aware and then fix some of these issues before they happen. Otherwise, typically, there's a joke that the police always comes, after the crime, or much later after the crime. So similarly, you don't want an internal auditor to come and tell them something which has already happened about 6 months or 1 year back, and the organization was badly hit. So these are the things which would help an internal auditor to be more proactive and forward-looking. Emergence of an ERM function, even though it is at a nascent stage, ERM is actually gaining traction. I would say that not because there is a regulatory requirement today in the Companies Act, Amended Companies Act of 2013, but today organizations have also learned that they have a responsibility towards the shareholders who have invested. Not only the shareholders, stakeholders, it could be bankers, it could be creditors, it could be potential merger acquisition kind of a situation. So I think each of these, individuals, they want to look at your effectiveness of the ERM. Now, let me tell you what is this ERM. See, whenever you present your results or forward-looking statements to the shareholders, you only talk about that my sales will go from point A to point B, my growth will be 20%, 25%, I'll do this, I will do that. You do everything, you mention everything. What you do not say is that if somebody were to ask you, okay, can you put your signature on the dotted line and tell me that you will definitely be able to achieve it within this 1 year time frame or 2 or 3 year time frame, can any management, can any board do? The answer is no, because of uncertainties. What are those uncertainties? You have an obligation as an organization to inform the shareholders that, hey, this is one side of the coin. The second side of the coin, the other side of the coin is, these are the kind of risks that the organization or some of will be exposed to, which might impact in achieving some of these objectives. But then at the same time, you just don't talk about the risks. You also go and tell them that, okay, hang on, this is how I'm going to mitigate them. These are my plans. These are my plan A, plan B, plan C. This is how I build my redundancy. So with a reasonable degree of assurance, I will be able to tell you that we should be able to give you these kind of results, because end of the day, they are the owners. You are not the owner, right? So most times, management feels that I'm managing the risk and therefore I'm the owner and I can take any risk. Sorry, you're not managing shareholders' funds. You're only implementing what the board has asked you to do. And therefore, it is the board's responsibility for managing the risk, because the board is accountable collectively to the shareholders, not the management, right? So that is the fundamental difference. So what is the role of an auditor in this? An auditor as an independent function reports to the board telling that these are the key risks which have been identified by the ERM, which has been presented to you and you have reviewed it and approved it. And these are the agreed mitigation plans which have been reported to you. And this is how they plan to implement. This is the time frame by which they plan to implement it. Internal auditor, as a third line of defense or as an independent function, reviews these mitigation plans, audits them, and says that, suppose the management says, I've implemented these and therefore the risk is mitigated. Now somebody will have to give that assurance to the board that these have actually been implemented. So you do actually a review of it and then confirm to the board saying, yes, these have been implemented and the risks have been adequately mitigated or within the tolerance. So I don't want to get into these other things about tolerance and all of that. So that is the responsibility of the auditor, and that is where you draw some of these critical risks or auditable risks. See, typically, unless and until it has been mandated by the board, you do not get into the strategic risks. And you typically look at the operational part of the risks. You don't look at the strategic risks, and they're all managed directly by the boards. But there are times when the boards actually, on a case-to-case basis, give you this responsibility, and then you also review that. So therefore, you draw these risk you go through the ERM, you discuss with the CRO, Chief Risk Officer, you try to understand some of the key business risks, so that it gives you a much better perspective in terms of the kind of risks that the organization is exposed. At the same time, you feel that certain things have not been included, or you have a certain doubt, either through your discussions with your peer or with the subject matter experts. You can actually raise these and say that, we see these additional risks in a particular industry. How is it that they do not figure in our list? Is there a specific reason? Is there a way how we are structured? Why do you think that these risks are not relevant to us? So those are the kind of questions that you ask, and you sanitize it. It helps you to adopt a risk-based audit approach. Now, as I mentioned, ERM is one of the drivers from which you draw the operational risks or business risks or auditable risks, by whatever name you call, from the ERM. Apart from this, you also look at your peers and everybody else, because even though it is not a risk, somebody might say, I still want you to look at this area. So either the audit committee or the management or somebody might want to say that, I still feel, I want you to look at it, either because, I have newly introduced a particular process or a policy, but then, I want you to look at it to see that, whether it has been designed properly, are we capturing the results accurately, are the payouts accurate? There can be multiple reasons. Somebody mentioned about GST. Now, so initially when it was being implemented, the people wanted us to participate actively, and we call it as a live audit. So when it was being implemented and automated, so we also participated actively, but with an arm's length distance, so that there is no compromisation of independence in terms of the way the process has been automated, and the results. Somebody will have to validate those results. Are those being done? So it's more from the process perspective, that how the application has been implemented. Right. So I think those situations, somebody might request you, even though it may not be a critical or a key business risk, but still, somebody might say that, why don't you please look at it? Or maybe introduction of a new policy. So why don't you come and have a look at it in terms of the design of the policy, whether there are any inherent defects. So those are the things, that you might want to include. And then you will also add as to management request being one of the drivers, right? So when you present the audit plan to the audit committee. So we talked about the rolling audit plans, as against cyclical, so that, they're constantly reviewed to make sure that they are relevant and current, and feel free to drop whatever you think is irrelevant, and then inform the board that, initially you approve, but then we feel that a more critical thing or an important thing has happened. Imagine, there has been an intrusion or a vulnerability which somebody exploited, and there was a theft of data, and you might want to look at the entire process end to end, which takes precedence than any other thing that has been included earlier in the audit plan. So you might want to drop something which you felt can be looked at in the subsequent quarter, and you might want to include the entire cyber risk assessment, in the current quarter's plan. So next is, but we talked about these 3 lines of defense earlier. There was a lot of ambiguity in terms of what is the role and responsibility of the first line, what is the role and responsibility of the second line, who are the second line, who is the third line. Internal auditor, as I said, was also actively involved in preparing SOPs, reviewing SOPs. So I think this is a conflict of interest, because once you prepare an SOP, you lose that. I would say, and what should I say? You lose that credibility to review that from the design perspective. Now, what is it that you comment that you yourself design? So those were the things that have been taken care when the 3 lines of defense have been very clearly defined and articulated, and where they have also defined very clearly the roles and responsibilities of each of these lines. And then we talked about ERM earlier. So this is typically a second line function. And ERM internal auditor, if you ask me, can only look at the effectiveness of the ERM structure or the program or the framework, by whatever name you call it, or it can manage the function but cannot own the risks, which means that you talk to the risk owner, you document the risk, you challenge, you look at because most times, when this is all done through interview sessions. So you go and talk to somebody, he says, I have no risk in my function. That means nobody is working, because unless somebody works, there's not going to be any risk. Unless I'm sitting idle doing nothing at home, and then there's no risk, business risk, I'm saying, right? So unless until you put to use some of the resources, obviously risk and reward will go together. They are sides of the two coin. So then you have to sit and explain, Baba, risk is something which is inherent. So the question is how you manage it. Probably you are managing it. So there's nothing, that's happening on another planet. Risk management is something that each one of us do day in, day out, the moment you get up, right? The moment you get up in the morning, you want to get dressed up and leave at a certain time. Now, why do you think you want to leave at a certain time? Because you do not want to be late to office. Otherwise, you might lose a half a day's pay. So that is the risk or that is the impact. And the risk assessment that you do is that, what would happen in case if I get late by 5 minutes or 10 minutes and I will lose about half a day's pay or whatever that is, or maybe half a day's leave will be cut off, whatever be that impact. And the mitigation plan is that you leave 1 hour early, and if you happen to be in Bangalore, you leave 4 hours early. Hyderabad is no better than Bangalore, so you leave 3-4 hours early. Similar thing happens, when you want to reach an airport or a railway station, you don't want to take any chances because the impact is far higher, right? So this is nothing but risk management. We do it day in, day out. Be it your financial management that your wife manages, or your husband manages, or your child manages, or any other. So we perform these. Now somebody has put some method to madness. That's it, and it has been included, and this has been included, historically because of a lot of these white collar crimes which have happened, and without any responsibility. So they said, okay, I think we have an obligation towards the shareholders, stakeholders, that we should tell them as to what are the business risks that the businesses are facing and how are we managing it. So that's what it is. Even though in India we never publish some of these key risks, we only publish whatever that is all generic, which makes no sense to anybody, especially to the investor or to the stakeholder. That's a different matter. Okay. So next is similarly various IA bodies like the IAA, the ICAI. So they are also recommending, there should be the right balance between advisory and assurance. I see a lot of debates, a lot of what should I say, literature advocating. I think internal auditor is the advisor. That is all rubbish. Internal auditor is not an advisor. Advisor only to the extent in improving any of those elements that I mentioned as the key objectives of internal audit. For example, in identifying potential fraud risks, yes, you are an advisor. In improving efficiencies or preventing leakages, yes, you are an advisor. In making sure that you are complying with the laws of the land, yes, you are an advisor. Or helping them, define a framework, yes, you are an advisor. I think, or safeguarding of assets, so that I have seen cases where some of the large companies started donating assets. You have no business. You cannot donate assets because it is not yours. It belongs to the company, right? And unless until you follow a certain process or a formality, one fine day you see that you have nothing left. Everything has been sold, right? So so these are the things somebody will have to go and tell the management, Baba, you can't do all these things. One fine day you cannot donate everything and say that I have donated all the assets. So this is advisory. Advisory doesn't mean that how to run the business, right? I think there is a big gap in terms of understanding what is an advisory role of an auditor. Auditor's fundamental role is assurance, because you report to the board. You are not advising the board on anything. You are only providing an assurance to the board. So who in turn can provide an assurance to the shareholders, who are their owners, who are their bosses, period. There's nothing else, right? So I think there is a lot of ambiguity in this area. I'm telling it out very, very clearly, that make sure that, when you get into an advisory kind of an engagement, make sure that unless it falls into those 5-6 elements where you are only trying to strengthen the process or identify the vulnerabilities or improve the efficiencies or whatever that is, blah, 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 there is nothing, there's no other advisory thing in this. So that you have to be very, very clear. So I think that balance will have to be maintained very, very clearly. And I'm telling you, no management appreciates your assurance function. Let me be very blunt in this. Everybody says, where is my moolah? How will I improve my profit? That is not my job. My job is to only tell you there are inefficiencies, inbuilt inefficiencies within the process to come and highlight, so that will help you. And so somebody comes back and says, then what is the benefit of having an internal audit function? It is only to the board and to the shareholders that whatever processes that I put in, they are working effectively. Or if there are inherent deficiencies, these are the inherent deficiencies, and that is the reason why this has been made, mandatory in the director's responsibility statement that they need to go and tell the shareholders that I am managing your funds and this is how shabbily my processes are structured. It has been made mandatory, regulatory, right? And it was done with this particular reason. Otherwise, there was no reason why it should sit as part of your director's responsibility statement. So is the case with the frauds. Any fraud which is beyond 1 crore, you need to report, right? So we'll have to be very clear in terms of the role of internal auditor and its the responsibility. Continuous improvement and quality assessment program again is something which a lot of organizations have adopted, either through a peer review or go through a professional review. If you are very keen to benchmark your internal audit processes with some of the best in the industry in terms of tools, in terms of the methodologies that you have adopted, that you have implemented, make sure that that you are there with the best. The reason why this is important is that it gives the board a lot more comfort, a lot more assurance that yes, I have a team which can manage a company of this size, and I can blindly place reliance on the judgment of an internal auditor. Because an auditor has to tell the board how good, bad, ugly the process that has been audited is, right? So if it is good, you say that, and it has to be an overall thing. So when you form an opinion, it is not just about the deficiencies that you have identified, but you also look at how to what extent the majority of the process or the project process objectives have been met. So when and there are rating scales available, so that you do not make it very, very subjective. Just because I think it is bad, you say that it is bad. It is not like that. You minimize the subjectivity, but there will be some degree of subjectivity because everything cannot be arithmetical, like 1 + 1 need not have to be 2 all the time, right? So you'll always have shades of gray, but then how do you reduce those shades of gray, and then you come up with that mature assessment and report? Because you do not want a situation you become so very nice to the management, you end up saying, no, I think it is okay, but then God forbid something happens there and you are in big time trouble. So I think it is important to, it should be fact-based. I think that is the underlying thing. It should be based purely on facts, not by perception. Not because I feel is good and I have a good rapport with somebody, so I cannot write negative, and nothing like that. If it is based on facts, you report that these are the facts on the ground, basis which this is my observation. So the reader can decide whether the conclusion that you have drawn or the opinion that you have provided is reasonable or not, right? So while you can have some degree of debate, but not to an extent where somebody will say you rewrite this entire report, right? I think that is very, very important, especially in the current situation where internal auditors are being held accountable and responsible for various acts of omission and commission. Because I'm telling you, the audit committee can always say that nothing has been reported to me. I've faced situations where the audit committee chair said that, can you word the report mildly, because otherwise I have to report in my director's responsibility statement. I said, sir, I can't do it. I will publish the report to you. Once I've done it, I have discharged my responsibility. I don't want to be very high on the popularity charts. I don't want to be an auditor of Satyam. Poor man. I'm telling you, I really feel sorry for that gentleman. I don't want to be high on the popularity charts. I want to discharge my responsibility based on facts. As long as I'm able to defend myself based on the numbers, the facts, the approach that I've taken, absolutely there's nothing for us to worry about. Right. So I think that is very, very important. So your quality assessment becomes very important, because when you go through that, they look at the entire 360-degree view in terms of your team, the competency, the methodology, then your internal audit positioning, what kind of authority do you have, the budget, the team size, blah, 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 you name it, the skills, competencies, all of that, right? So it's a good, I would say, mirror for you to look into and see that, if there are areas that you might want to improve upon. upscale. I think somebody, the predecessor also mentioned about upscaling. It's so very important, especially with the change in technology, with the change in processes. You name of technology, you've got blockchain, drones are being used in physical verification of freehold lands, and of course also as a service in the commercial space. Then of course augmented reality and is more in the gaming sector. So unless until you are part of the gaming sector, unless it's being used elsewhere, you don't really have to worry. But then some of these other IoTs, cloud again comes with its own set of risks. So all of these, as you start adopting blockchain is another, while we all presume that blockchain is safe proof and nothing can go wrong. It has its own internal vulnerabilities, and there are certain events which have happened. Somebody has broken in. So unless until you really understand the blockchain technology, probably you may not understand what I will say. So that's the reason I'm skipping it now. So you please feel free to engage SMEs or domain experts wherever you think you need them, and do not ever go and audit with half knowledge or with some kind of superfluous knowledge, and do not go with jargons. This is another big problem that I've noticed. People easily throw jargons without even understanding what do they mean and why do they need to do certain audits. And I've come across many such situations in the past when I engage with SMEs. They keep using a lot of these jargons, and when you cross-check, when you cross-question, suddenly they fall flat. They don't have answers. They don't understand. I think so. These are the things you have to be extremely careful when you engage SMEs. I've had a situation where in the board, some of these SMEs, they ask the question, why did you do an audit? Why did you pick this area? They couldn't answer. I said, absolutely ridiculous. I don't know why you did this audit. And it's one of the big fours. So I think you don't want to be in that situation, right? So competency assessment is something that you'll have to carry out. You need to be very clear in terms of what is the kind of skills and competencies that you need your team to have, depending upon the kind of business that you're in, the kind of the IT landscape that your entire processes are built. So I think you are the best person as an audit head to be able to decide as to what are the skills and competencies that you need. You please document it. Make sure that you do an assessment for every team member, and then give the report card that these are the areas that you need to improve upon, and put them on the training so that they get trained, oriented, and then you can again review after whatever time frame. It could be a year or 1 year or 2 years. They can flow into the KRAs also, and can be part of the training or developmental needs, and so that it gets documented, and which you evaluate and then provide them the report card. Composition of the team is very, very, very important. What kind of skills do you need? Do you need IT skills? What kind of IT skills? IT itself is a huge domain. Not everybody would have all the skills. So you should decide as to what are those key skills that you need, so that the other, either you can go source, outsource, whatever that you want to do, the kind of a model that you want to adopt. But then what are those the primary skills that you want your team to have? You need to document that. You need to be very, very clear. If you're in doubt, take professional help, and make sure that you have the right composition in your team. So you need to have somebody. So I have seen a lot of individuals who have very little knowledge about flowcharting. It's so very important when you want to do a design level assessment. How do you flowchart from a narrative? So it's so very important. It's so very fundamental to audit or for any assessment that you do. So I mean, there are some basic skills. It could be analytics. It could be use of tools. Automation. So as somebody rightly said, the predecessor, you need not have to be a technology expert. I'll give you a small example. When I was in telecom, it was 3 months into my joining, and that was my first telecom company. I worked in multiple domains. I worked in manufacturing, retail, telecom, IT, ES, name it, and travel, retail. And so in this telecom company, within 3 months of my joining, that they never audit of the switches and billing systems were never done, right? So one of the things I decided was that why should we not go ahead and do an audit of the entire telecom switch? So we picked it up as an audit area, and we landed up at the telecom switch, or one of the circles. So when we said that we want to do an audit, they all laughed at us and said that you are not technology guys, you don't understand switches, you don't understand technology, you are not from telecom. So we said, okay, fine, no, we have no problem, but still we want to go ahead. So we said, okay, we have certain questions and we need answers. That's it. We don't need anything more. one of the questions that I asked is that how do you know that the switches are generating the CDRs? The CDR is a call data record basis which the calls will get rated and then the consumer will get billed. So they said that this is a foolish question because this is the fundamental purpose of a switch. The switch has to generate CDR. It is like asking a human whether your heart is pumping, otherwise the fellow would have been dead. So I said, prove it. So for me, the question is, I have a question, you should give me a logical answer. The question might appear foolish, but it should have a logical answer. So they said, they gave me a list of CDRs. We actually applied our mind and did a certain reconciliation. So unless somebody is from a telecom background, I will not do, maybe they may not understand, but if somebody is from a telecom, I can explain as to what is it that we have done. And you'll be surprised, 24% of the CDRs were not getting generated and they got shocked. They send it to Bell Labs. Bell Labs confirmed. They sent it to Germany again. They also confirmed, yes, the CDRs are missing. You will be surprised to know the amount of compensation that the OEM has paid us. See, most times we presume something is generating from technology or through technology. I think it is hunky-dory and you just slap it up. But then as an auditor, you don't have to be a technocrat. You don't have to be a technology geek. All you have to do is ask questions and ask somebody to give you logical answers. Anybody can validate it. You can validate if you have the ability or intelligence or get it validated to somebody. But make sure that you ask all the logical questions. The next question I asked is that how do you know that all the CDR, whatever that are getting generated, those are getting built? This is again a rubbish question. They gave me that this is TCP/IP protocol. If this batch doesn't go, the entire batch will be rejected. All these. I said, prove it. You'll be surprised. Half the CDRs were not even going there. That shows how these have been implemented, who performed the user acceptance test. That is what you typically audit as to how did this very thing first go into the event life? Who implemented this? Who was responsible? Right? So these are the questions you ask. You don't have to be. That is what I did in the IT company. I'm not an IT guy, but I asked all the questions. Whenever an application is implemented, you ask all the questions. How do you know somebody cannot break in? How do you know somebody cannot steal your laptops? We have this system of destroying hard drives. When we visited some of these geographies, we were surprised they were all lying all over the place. What is important is not the cost of the hard drive or the laptop. The data which resides, it may contain some critical information, it may contain personally identifiable information, it can contain client critical data. That is more critical, which will expose the client and then it will expose you through penalties. Ask those questions. What is your asset disposal process? You don't have to define, but you can ask questions and say, show me the process. You are capable of looking at the design of that process. Go ahead. Do not keep it because you don't have the skills. Backup process. How do you take? How many copies? Where do you keep it? How do you archive? What happens if there's a fire here? What happens if there is a theft here? What happens if you lose the tape drive during transit? Ask all the logical questions. They might say this is idiotic, ridiculous. They may laugh at you. Say, okay, laugh, have some good fun. No problem. We did the same thing when we did an audit of a lot of these areas were done for the first time in the entire history of these companies, right? Pricing audit. How do you price a customer contract? They said, you're an auditor, you should know everything. I said, I'm a fool, I know nothing. I'm here to learn from you. Now, what can he say? If you admit saying, you're a fool and you're a dud and you're here to learn, what the other fellow can say? He is forced now to explain the process. And you'll be surprised he was summoned by the audit committee. So you don't have to feel shy to ask questions. Feel free to ask any amount of question. Make sure that you satisfy yourself and you get all the right answers. They may sound idiotic. Somebody might laugh at you. Somebody might make fun of you. Do not bother. You should be thick-skinned to be a good auditor. But make sure that you ask all the questions, and that is what will gain you a lot of knowledge. Ask all the questions. Okay. Next is you should stay connected with technology and innovations. For example, blockchain. each one of you should understand what is blockchain, what is the concept behind blockchain, how does this whole thing work. Now, you may not be a coding expert to be able to code a blockchain solution. No, we're not asking you to do that. For some of the things I asked, I'm telling you, in the IT company I work with, how do I know that you are following the secured coding protocols? How do I know that the code that you're writing is foolproof? Somebody cannot hack it. They didn't have an answer. There are protocols available. Right? So it is a very innocuous question. How do I know it is? Then version control. What happens? Somebody, someone find and a disgruntled employee will clean up your thing and goes away. What happens? How do you archive it? How do you know you have the latest version? How do you know that those versions have not been tampered with? It's a logical question, right? You don't have to get somebody from outside to be able to ask these questions. You should understand what is happening in the technology space. If you are, if your company is technology based, if you are in the manufacturing, then you might want to understand how the other manufacturers are managing some of the processes, what innovations that they are doing. It could be a substitute, it could be minimizing your rejections, it could be a design improvement, it could be use of some of the inputs or the materials that go into it. It could be any of these. But make sure that you should be abreast in terms of what's happening in that space. You should know what is happening there, right? Then there are related risks. Okay, they have adopted something which is new, which is emerging, which is cutting edge. But then what are the related risks? What is it that they're struggling with? Can we learn something from them in case we adopt something? So that is where that advisory thing might come in, right? Threats. What has happened? Incidents. So because a lot of these, we have seen cases in the manufacturing industry where you procure certain equipment and then suddenly the vendor has gone bust, the spares are a problem, maintenance is a problem, and then what happens? You have a huge issue, right? So those are extremely critical. It could be even your applications. Imagine your OEM suddenly goes bust, he winds up his company, walks away. What happens? And you imagine you are managing critical information data, what happens to it? Right? Well, what kind of vendor contract you have built in? So can you tie up the vendor with your contract? Can you take him to the court? How much damages? But then can it compensate the business loss that you incur? See, you evaluate, you question, you challenge, right? Okay, regulatory and compliance. Again, my predecessors have spoken about the compliance piece. It's so very important because again, like technology, compliance, and if your company happens to be a global company, they change by the hour. What is applicable today will become redundant tomorrow, something else comes in. So you need to be very clear in terms of what is relevant, what is applicable, what is not applicable, what has become redundant. All of that becomes so very critical and important. And you should look at automation opportunities to make sure that everything is available in digital form, so that if any authority asks you, all you have to do is, especially I'm telling you in the privacy space, you'll be surprised with some of these the compliance requirements. I mean, and it seriously impairs your audit audit procedure. For example, you want to do a payroll audit, and imagine you're doing it somebody for a UK employee based in India. You cannot do it. You have to take prior approval, prior permission. Then you will have to provide all the information, all the data that you collected on his behalf. You have to share it with him. You have to get a sign off. You'll be surprised with the amount of compliance that you have to go through. Otherwise, if he goes and complains to the local authority, your company is in big soup. 4% of your global revenue is for any data privacy violation, 4% of your global revenues is the penalty. So you can imagine, right? One audit of yours will bring down this company. So people will say that better you don't audit anything, sit at home. Right? So you have to be very careful in terms of what is it that you can do, what is it that you cannot do, and what is it that the organization will be exposed to if you do certain things, without realizing what you're doing. And similarly, in the forensic space, when you do certain investigations, because I was heading investigations for almost all the companies that I work with, you have to be extremely cautious in terms of what questions you ask, how you ask, because there are certain things which are strict no, and the individual can go and complain to the local authority. So you have to be very, especially in the global. In India, you can do anything and get away with, you can get away scot-free. But global, if you happen to do any other geography, you have to be very, very careful and be aware as to the local compliance requirements, the regulatory requirements. What is it that we need to comply as an organization? What is it that you need to comply as an employee when you travel and when you perform some of these activities, including audits or forensic investigations? I think this is a very important point that was touched upon by my predecessor. I think it's so very important to stay connected with the senior leadership and the board. At the end of the day, it is the management and the board who provide a direction to the audit function in terms of what is the expectation from them. So you are not the, you're only supporting both the management and the board. Otherwise, you do not own any function, unlike a line function. It's not a line function. And therefore, you need to constantly be in touch with them to gain, to get feedback, to get direction from them in terms of what is the expectation from you, what need to be looked at, to what extent it need to be looked at, how the reporting has to happen, to what extent they want to know, because there are some managements who want to know everything from day 1 to day 30 through the entire life cycle of an audit. Some they say, no, you only send me this. Rest I'm not even interested. I don't have time. So each one has their, has his or her own needs and requirements. Make sure that you understand their expectation. You make sure that wherever there is a conflict, feel free to go and tell them boldly that sorry, this is not something that I'm permitted to do. Make sure that you work strictly according to your charter. And if you're in doubt, best to go and ask your audit committee and get something in writing from them, rather than doing something on your own and landing up in a suit. And this is my last takeaway, that whenever you are embarked on any change or it could be automation, it could be implementation or adoption of any tools or anything that you do, or re-engineering your existing audit process, make sure that your existing process is robust, stable, and scalable. I have seen a lot of cases where they jump from one end to the other, and the existing thing itself is not stabilized, and then they go on to the next level, and then they mess up everything. I think that is a big problem. So in the internal audit space, make sure that whatever that you're doing, even if it is manual or if it is elementary, make sure that when you move up on the maturity map, make sure that your first step is solid on which you are standing before you move to the second step. Otherwise, you are trying to jump here and there and you don't know what is in store for you. So you don't want that to happen. Especially some of these technologies, they take time, and while the vendor will always promise you the moon, you will not even be able to take off. Trust me, I'm telling you, I've seen a lot of these in my life. So you have to be extremely cautious, because somebody will say that I will do this, I will do that, it will take a day, it will take half a day, it will take half an hour. Do not trust. Make sure you keep running your existing process. Make sure that is robust, that is reliable, that is dependent, scalable, before you embark on your next step or your next journey. Okay, so this is my takeaway from my experience that I have gained. So these are my 2 pence. I hope you found this useful. I'll appreciate any feedback, any inputs that you may have. I would like to thank ICAI for the opportunity given to me, and to Nandaji once again. Thank you. Good night.
Thank you very much, sir. This was undoubtedly a very wonderful session. Thank you. So this brings to the end of our today's webinar. I would like to thank Nanda sir, Seema ma'am, Gyan Mishra sir, Sandhya ma'am, Shrikant sir, VGVS Sharma sir, Arun sir, Surbhi ma'am, Shivani ma'am, and the technical team that helped us in making this webinar successful. And also thank you to all the participants for being a patient listener. Thank you, everyone. Thank you.
Sir Shrikant here. Thank you. Before we close, we have to have a wonderful round of applause for Sharma ji. What he did in the 1 hour that was given to him is phenomenal. He took us from tradition to modernity, he jumped between both, and every time he came out on top in everything that he spoke. Very, very engaging sessions, sir, all encompassing. There is nothing that was left out. Nobody could say that anything is left out in the whole thing that you taught us all today. Hats off to you, sir. Thank you so much for coming in.
Thank you for those wonderful words, sir. I think
no, it is from the heart, sir. You did that.
It's your humbleness, sir. Truly appreciate.
Thank you so much.
Thank you, sir.
Good day. Good day to all of you. Good day. Bye.
Good day.
Thank you.
Night.